that has happened. Now, obviously, it's all supported by the internet and the systems. Now, going into the program, straight away we are moving into the program. Now, we all know that the Sensex has hit record highs of more than 50,000 and the Nifty an all-time high during last week. Now, the Indian markets are seeing record highs, and the number of clients investing securities for risk chartered accountants are now more frequent. In this contest, we have today a webinar dealing on taxation on dividends, equity, commodity, and currency market transactions. For handling the topic, we have a very expert faculty from THRISSUR, DERICK, RAPHAEL, who is into investing also. On the screen, we have our very dynamic, charming chairman of the THRISSUR brand, C. Anup G, chairing the session along with the very dynamic VC, CA Aryan KK. Now, before moving on to the seminar, dear attendees, please make use of the Q&A link in the application for typing in your queries. The same will be addressed in the Q&A session after the presentation only. Now, over to the chairman for the welcome speech. Sir.
Thank you, C. Ajit. Good afternoon, all. Sorry for the belated starting of the program. Faculty of the day, CA DERICK, RAPHAEL, respected senior members and friends. Welcome to the webinar on taxation of dividends, equity, commodity, and currency transactions. Before this, as just now I informed, let me just update on the upcoming programs. The discussion on union budget along with the TMA and the Chamber of Commerce, that is going to happen on February 2nd. Exact timing and agenda will be circulated soon. And immediately after that, we plan a close-by-close analysis of direct tax proposals. That will happen on 5th of February. Again, it will be a virtual seminar, and the session will be handled by CA Prashant Srinivas of Korea. So coming back to today's topic, the taxation of share market transactions and dividends. The subject has undergone a lot of changes in the last few years. Perhaps you all would agree with me when I say that in Kerala, more and more people are entering into stock market transactions nowadays. And many of them are into derivatives as well. Even people into commodity exchange transactions are also on the rise. So many members of this compulsory tax audit limit. What is the definition of turnover for computing this 2 crore limit for 44 AB? So these kinds of confusions are prevailing. Also, the dividend, after a very long gap, it has become taxable in the hands of the payee. That too, sort of exemptions and all. So this is the circumstance, and this is exactly the reason why I selected this topic for today's discussion. And today, we have yet another young faculty from our branch, CA DERICK, to handle the topic. I'm extremely glad to note that CA DERICK is the 19th faculty from THRISSUR branch to present a paper ever since I took over as chairman last year. So nowadays it's becoming a branch full of resources. Now let me welcome CA DERICK, RAPHAEL, faculty of the day, to the webinar. May also welcome all the members to this webinar. Now, let me call upon the Vice Chairman, CA Aryan, to formally introduce the faculty.
Thanks, sir. Anup, sir. Chairman, very good afternoon, all. Our respected Chairman, other management committee members, Speaker of the day, CA DERICK, RAPHAEL, and all other members attending this seminar. A member, just like our Chairman has noted, one more member who is coming as a faculty for our members' benefit. It's my great privilege to introduce our today's speaker, CA DERICK, RAPHAEL, our member. He's a chartered accountant with 16 years of experience and expert in portfolio management, business advisory, and financial structure. He has a profound knowledge of financial markets and has started investment trading in the stock market at the age of 17. Worked abroad for 10 years and visited most of Europe and Middle East in search of investment portfolios, opportunities. He has managed Okay, sir. Okay. Let me complete, sir. He has worked around 10 years and visited all the countries abroad. He has managed investment worth US $300 million in financial assets and more than US $800 million real estate portfolios. He is an expert in private equity investment, selecting hedge funds, angel investing, investment in bonds, commodity markets, equity market. He is also liaised with international investment banks like UBS, Julius Baer, Barclays, Credit Suisse, HSBC, Peter, Merrill Lynch, Lloyds Bank, and dealt with private equity hedge funds like BlackRock, Apollo, Delancey, etc. Presently, he's running an accountant firm with two partners in THRISSUR. They focus on clients to identify and establish new business. They presently advise on clients on future business like alternative energy, waste management, integrated farm project with an opportunity to develop into an exotic tourism project and investment in arts. They also provide clients individual financial planning and succession planning to safeguard their assets and transfer it to next generation without any disruption. Few of his work experiences with the MNCs or big concerns are Ansaf Investment LLC Dubai UAE. He was the investment manager during July 2006 to March 2013. He was also associated with Hydroturf LLC Dubai UAE. He was working there as assistant finance manager during the period February 2005 to June 2006. He was also associated with Peninsular Capital Markets Kerala, India, as head equity research and investment consultant during May 2013 to January 2005. He was also AV Saratwala Chartered Accountants, Gujarat. He was associated as well. So with these few, let me introduce today's speaker, our member from THRISSUR, CA DERICK RAPHAEL. Thanks, all the members. Derek, sir, please start the session, sir. Over to you, sir.
You're muted.
Can you hear me now?
Yes.
Okay. Thank.
Please, sir.
Derek sir, I think Anup sir, just let me just clear up the technical issue right now. Derek sir, what you can do is that I had asked him to log in his mobile phone and also in his system also. Just if you can turn down the volume of the system, then we will not have that echo. You can just unmute turn down the volume of the system.
To level 1 or something, that would be easy.
And you can just have the phone reception on.
Hello. Can you hear me properly now?
Yes. Of course.
You can start.
Now, thank you for the introduction. Thank you for the good words which is mentioned about me. Now, everybody knows that nowadays a lot of people are looking for equity investments and making money out of it. That may be a good idea to do that. However, there are also some kind of pitfalls which comes with the equity trading or making the business. It means making it as an income stream. Now, most important thing nowadays is the taxation. So taxation has changed quite dramatically in the sense that most of the people don't understand what is the taxational impact of the equity market or the dividends or the commodity, and what happens when they're trading with the futures and options. Now there is recently there has made some changes in the dividends. Earlier it was dividends was tax free. Even it is says it's tax free, it's not actually tax free. So it is, we'll start directly go to the topics now, and then later on stages they can people can ask questions if they have, and then we'll answer it, and we'll make it as an interactive section. So my topic is basically on taxation of dividends, equity markets, commodity, and currency. While we'll take the first portion, dividends and equity first, because that are interrelated, and the profitability on each of these items are related. So we'll come up with the taxation of dividends first. So what is dividend first of all? How dividend is?
Derek
What
sir,
is?
sorry for interrupting. Can you just do the full screen of the presentation so that the members can view all the same?
Okay, 1 second. I think.
Or you may just click on that bottom right hand corner also. The fourth icon. Bottom one. Yes, that's it. That's it. No, the other one. The other one.
This
Yes.
one, right?
Yes.
Okay.
Oh yes, great. Thank you.
So basically, what is we'll talk about what is dividend first, and then we'll go for what is the taxation of dividends on various aspects. So dividends can, as normal parlance, dividends is the distributed profit. But in income tax, not only the distributed profit is income tax, I mean dividends, but there are also other items. So basically, distribution of accumulated profits to shareholders is dividend, which is known to everybody. And the second thing is that distribution of debentures or deposit certificates. So this is also comes under dividends. And when it comes under dividend, when it is distributed out of the accumulated profit, then only it will comes under the dividend. So this is also comes under dividend. Now there is sometimes people get bonus shares, which is they think that it's free of cost. So then there is no need to pay any tax on that. But bonus shares on accumulated profits is again is a dividend, which is now will be taxable in the hands of the shareholder. Now there are when the company goes into liquidation, there are most of the times company goes into liquidation because they don't have enough assets to meet their liabilities. But in some cases, some companies are going into liquidation simply because they don't have a much better opportunity to invest their own money, or the business is having no scope or no future. So then some companies will go for liquidation. That is, in Indian scenario, this is very less, but still that happened. So in that case, in the liquidation, if there is a distribution out of accumulated profit, that will be also treated as a dividend in the hands of shareholder. Now, there sometimes what happens is there is a reduction of capital. Why there is a reduction of capital? Because sometimes the opportunity for a particular business may be little lower for a company, because then how a company makes a decision on investment is based on the capital, the return on capital. So now the return on capital is lower than the bank interest, or maybe in the risk they are taking. Then some companies may decide to return their money to the shareholder so that they can utilize it for a better way. So sometimes they distribute it back to the shareholder. If it is the distribution is accumulated profit, then it will be again treated as dividends. Now, loan and advance made by closely held companies to its shareholders out of accumulated profits also dividend, which is not normally happens for a shareholder. But again, this is also a possibility. I was just giving what all the dividends is explained in the income tax. That's it. Now, how the dividends are taxed? That is the most important thing. So we have till last financial year, dividends are exempted in the hands of the shareholder. Now the rules are changed, but next year onwards, the shareholders are liable to pay dividend tax on dividend. So next year onwards, what will happen is they have to pay the tax on dividend. Now, how much they have to pay as tax, that is to be depending upon what is their income tax, income tax limit as per their slab rate. Even though assessment year 2020-21, there was no tax in the hands of shareholder, the company pays the tax. So there is a section under 1150, which says that the dividend distribution tax to be paid by the company while making a distribution of dividends to the shareholders. Now that rule is changed now. Now they have to pay it from their pocket. Now the company has to deduct tax at source under section 194 if dividend is greater than 5,000 rupees per shareholder. That becomes, a new, earlier there was no TDS. This TDS will be gone to our account, and then we can, as per our slabs, we can get the return. So now onwards, the important factor is the people who are getting dividends has to have filed their returns if their taxable limit is less than their income is, total income is less than 250,000, so that they can get back whatever they have deducted from the company side. Now, there are two type of people who invest in the share market, who is getting the dividend from the company. One is traders. Traders are basically wants to make money out of the price movement of the shares. So trader can show, there are a couple of ways to trade. Pay the tax on the capital gain for the trader, but assume that the trader is treating the dividend as a, he's trading as a business, then the income from the dividend can be treated as a income from business. So what is the benefit of a trader is if he is treating his income as from business, he can deduct all the expenses, including the interest, including the collection charges, or any other expenses incurred by him can be deducted out of these dividends. When the comes of the investor, he is basically investing in share to make income out of the shares. So investor, in the case of investor, the dividend can be treated as the income from other sources. Now, when it treated as an other sources, then only up to 20% of the dividend can be treated as income. That only for interest on loan. If they have take any loan for buying the shares of the company, and because of that he is getting and dividend, he can deduct up to 20% of the loan interest as a expense towards, expense against the dividend. Now there are two type of dividends are paid by the company. One is basically interim dividend. When normally a company makes regular profit, they decide to pay a dividend not on the basis of their previous experience. Now sometimes what happens is some companies, you might have shown that, there are companies are announcing interim dividend, and then after the year end they may have a final dividend. So how the treatment of interim dividend and final dividend is different. The taxability of interim dividend is on receipt basis, because interim dividend is basically they are not assured kind of income. So basically that is only can be treated as an income as and when there you receive it. So only on receipt basis you have to pay tax on the interim dividend. Then there is final dividend. Final dividend, the treatment is little different. In final dividend, even it is declared or distributed or paid, whichever is earlier, that is the period of tax. The point of taxation is whichever is earlier. So assume that you have a income tax filing, and the March 31st you have the company has declared the dividend. Normally it won't happen, but assume that they have declared it, or for the previous year they declare it on 31st March. Then even though they have not paid, you are liable to pay tax on that. So earlier you will not be bothered about the taxation aspect of it because the company is deducting the tax, dividend distribution tax is there, the shareholders or investor has to be, he don't need to be worried about it. But nowadays they have to be really worried about the taxation point of view. And as professionals, we should advise the shareholder, because most of the time when we ask the investor, what all income you have, they will say that, I don't have any other income. But when you are looking into their bank statements or, their demat account, and then you are comparing it with the companies which is issued or distributed dividends, we will come to know that, okay, there are so many companies are distributed dividend. They may have separate accounts and separate demat accounts, and their amount has to be credited to their account. They're not even bothered about it. Nowadays, earlier, the dividends are paid as checks, and people are having a track of it. Now, dividends are paid directly to their account. Most of the people don't even aware that, there is something called dividend, and this will be credited directly to their account. This predominantly happens when people are trading on shares, and they may not hold it for a long time, but they buy the shares and sell the share after declaring or book closure. This will happen, and this may create a trouble for create trouble for hello. This may create troubles for the investor. Can you hear clearly?
Yes, of course, we can hear you.
Please carry on.
So that is then that is very important factor has to be considered, because the ignorance of the investor or ignorance of our client may land in trouble for the people, because nowadays income tax is having all the facilities to collect the data, and we can't just get away with the details. And even if it will be treated as not even it is there will be a chance of 100% penalty on this kind of ignorance. Now, what are the deductions available from dividend income? So as I mentioned earlier, if people are doing a day trading or share as a business, then the deductions available all the expenses, including interest, collection charges, maybe office boy, computer, depreciation on computer, whatever, like internet connection, mobile phones, whatever they are using for their trading purpose can be treated as an expenditure. Now we may think that, okay, we may not be using all these items in trading, but in reality, when we do a trading, we need good computer systems and maybe all the infrastructure, maybe 1 or 2 employees to properly manage it, softwares basically for predicting the future movement, the data which has to be streamed from the data providers. All these costs can be set off if you are trading as a business. So most of the people who comes to us say that, okay, I go to the nowadays everything at home. People are doing it from the internet. But earlier, people are going to the offices where the trading is happening, and they spend money for going there and coming back. They never keep all those things in perspective. And they make most of the time, when somebody makes a profit, they don't even want to take all these expenses. But when they take a loss, they have to be understand that this can be set off in their future years if they treated it as a business. Now, as I mentioned, if it is an investor, then he can only deduct deduction available from dividend is the 20% on the loan interest, which can be set off against the dividend income. Now, taxability of dividend for residents and non-residents are different. Now, the dividend taxability on dividend is tax is basically for the resident is applicable on the basis of his tax rates. So, what are the applicable tax slabs depends upon his income. Now, earlier when it is DDT, it means dividend distribution under 1150, what is happening is the company has to pay a tax of around less than 20% on the income. Now, if the assessee or the taxpayer is in the highest slab, that means about 20 lakhs, about 10 lakhs, he is liable to pay a tax of 30%, which is basically a 10% increase in the tax slab, means tax rates compared to the earlier one. But we even said that, the small investors, which is normally they won't make that kind of money, this change in the law is quite good for them, because they don't need to worry about their slab rates, because most of them will be coming below 20%, or 10 to 20%. So that would be a good thing for a smaller investor. But larger investor, or the person who is having more than 10 lakh income, they have more tax liability because of the change in the change in this taxation. Now the okay. Now the taxability on non-resident is a little different compared to the resident. So they are treated it as for non-residents, the income will be always treated as income from other sources. There is no option. They can take the chance that, okay, it's a business income, and then they can deduct the amount. So even if they take a loan to purchase the shares, they won't get the benefit of the deductions from the dividend. Now they get there are two types of what you say, there are two types of taxation available to the non-resident. One is 20% on the dividend they can pay as they can pay as they can pay as a tax. And when they purchase the GDR, Global Depository Receipt, in foreign currency, and they get as an employee stock option, then they can go for a smaller amount of taxation, a smaller rate of taxation, which is 10%. So basically, if you are non-resident and having a taxation liability, and you purchase their shares in foreign currency, they have better, means they can go for an option for taking a 10% taxation on dividend, which is good for those employees. And this is limited to some specific kind of businesses, which is information technology, biotechnology, and pharmaceuticals, those kind of companies. But the people who are belongs to working in those companies, they can go for this reduced rate of taxation. Okay. Now and now we'll go for the main thing, what taxation on equity. So taxation on equity, we have everybody know that there is short-term capital gain, long-term capital gain, and then how the capital gain means, the income from the trading can be treated. It can be either treated as capital gain or as a business income. And then there is speculative income, and there is speculative income. And then how the tax means, we'll discuss about the advance tax and the audit requirement. So now first thing we'll go for what is short-term capital gain or loss. So when you are talking about short-term capital gain, everybody knows that if the equity shares are held for less than 12 months, then sale price is basically the sale value of the shares. Cost of sales will include a couple of things. Now there is brokerage, there are zero brokerages also nowadays, but there are brokerage, then there is GST on brokerage, then there is stamp duty, security transaction tax, it says, then there is SEBI exchange fee, then there is any other cost which is incurred for the transaction. the sale price minus all those costs, if it is greater than the purchase price, and the same type of cost will be there in brokerage, and all those expenses, HTT, security transaction tax, and SEBI transaction tax, GST. If the sale price is greater than the purchase price, including all these costs, then it will result in short-term capital gain. Now, short-term capital gain is taxable at 15%. So, if somebody is trading and having no other income, then he can take an advantage. If his total short-term capital gain is less than 2.5 lakhs, he can take the basic exemption. So, if they take this basic exemption, if you are looking at some clients, financial, trading income, and if it is less than 2.5 lakhs, then definitely he no need to pay any tax. But we have to ensure that he don't have any other income, or if he has an income, then it should, the limit from 2.5 to this total income shall be only exempted, and thereafter whatever with additional income will be taxable at the rate of 15%. And if it is this is only for listed share. If it is unlisted, then it should be 15%, 15% on that. There is no other, and will be as per the tax slabs, not 15%. It should be treated as a income and will be treated as tax slab. Now the 2.5 lakh exemption will still be available on that. Now there is the most important thing when you are looking at any of the clients' details. Most of them will have loss. I mean, my personal experience, when I see most of the investors or most of the people who are filing the returns, most of them have maybe 70-80% have loss. So people are saying that, okay, since I made loss, why should I file my returns? Because you made a loss, and you are supposed to pay, a professional fee for filing the return. Then people think that why to pay tax on unnecessarily. Why to incur cost unnecessarily for filing the return. Now, what is the benefit of filing the return when there is a loss? Now, loss is incurred basically because of some of their calculation went wrong, or maybe because of their overexcitement. Most of the times, what happens is the people make loss, and then they have some investments which left in the stock market, and later on they make a profit on that. So normally, people eventually they will make a profit if they are become a little bit more on they have a little bit more long-term purpose. They may get some money, and they learn the discipline once they make loss. So what is we have to always, I will tell all the people that if you have a loss, if there is a profit, then even if you are not file the return and you pay the tax, then it's fine. But if there is a loss, you should definitely file the return, because it can be set off against short-term, long-term from any capital asset. Now, any capital asset is very important thing. Now you sell a property, you have a property which is you can sell later on, and then you have a loss which you can set off against that. Your capital gain tax on property is 20%, which can be saved. So we should highlight the benefit of filing the loss, so that our clients or our people can get the benefit out of it. Now, if if the loss cannot be set off entirely, then it can be taken, carried forward for 8 years, which everybody knows. So basically 8 years is a long good period where people can get benefit of it. So I think that also be a good thing, if provided if they have some other assets or some other things they can sell. Even some of them may have gold, or some of them may have capital assets which can be set off against it. Okay. Now long-term capital gain is again there are two long-term capital gains. One is for listed shares and one is for unlisted shares. For listed shares is 12 months and unlisted shares is 24 months. Now, again, we will say that, what all the sale price, we explained that what is sale price and what of cost of sales, and again, earlier in the short-term thing, same as here as well. Now, some of the brokerages offering 0% on 0% on the whole brokerage on delivery. Now, when they are giving that, they are also taking a demat account charges and related charges, which is over and above the normal charges. So we have to be means when we are making this statement, we can always take all these expenses, which is because this is part of the expenses which we made profit. So we can take all these expenses while computing our profitability. Now, there is a good thing about long-term capital gain is we can up to 1 lakh rupees, there is no long-term capital gain. So that is, if your total capital gain is less than 1 lakh, your taxable is 0. Now, if it is more than that, then it will be 10%. Now, there is a change in the long-term capital gain in 2008 February. Now, the people who are before that, the long-term capital gain was 0. Now, the people who are actually holding the shares till 31st January, then they will have a problem, because till that date they don't have to pay any tax. Suddenly, the law is changed and the share price is maybe as same as the last time. Still, they have to pay the tax. For example, there is a share which is called Capri Global, which is trading at around 35 rupees. Then it has become 1:5. It is split. They have split the shares into 2 rupee share. Now the effective rate will be 7 rupees. Now the share was trading in January 31st is around 190. The share, when if you are not sold the shares on January 31st, and then you hold on and then you sold it on maybe after a year, now it is 359, but if you sold out after 1 year, it may be around 204 and 205. Now the person who actually bought the share, now maybe say 7 rupees, you can buy maybe 1,000 shares or 2,000 shares, it will not make much of a difference. So the person who is actually bought that shares will be supposed to pay a huge tax burden for him. Now, the government has identified this problem and brought in a new clause when they introduced the law, say that whatever be the price on 31st January, the highest price of the share can be deducted, while computing the net, the capital gain, if you are holding the shares before 31st January 2018. Now, when people comes, we'll say that, okay, they bought the shares for some this price and then sell this shares for this price. There is a huge profitability. We have to always see that when they're actually purchased, which can reduce their taxability to a very, very nominal level. Because I have some personal experiences, they have huge capital gains now because the share prices are moved up quite substantially, and a lot of people are selling their old holding. And I have come up across various cases where they have to supposed to pay some of our may not be aware of the situation. Some of them are advised them to pay huge tax, so there's no need to sell this. That kind of advice they got. But then but if you are not taking a profit from a share, then you will not be able to make it's always in the books, but you will never achieve it. So I told them that, okay, if you have purchased it before 31st January, you may have a much lower impact. So in this particular case, this person has some 70,000 odd shares on this Capri Global, and his tax liability is less than 65,000 rupees or something, while computing as per this one. Now, if it is computed as per the other, without taking into consideration of forefather clause, which is called this one, so basically, if you are not taking that into consideration, then his liability should be something in the region of say 10%. It will be 114 lakhs or 15 lakhs. So instead of that, he has to pay very nominal amount. So these kind of things will improve, I mean, our reputation as well, and also the client will be always he'll come continuously, repeatedly going into the investments. Also, that will give a good means reputation about our community as well, because as a chartered accountant, they will feel that, okay, for every good financial advice they have to go for a chartered accountant rather than going to the brokerages or the street people. So these kind of things will help our profession to grow a much better level. Now there is a long, now we talked about the gain, now there is loss. Mostly in my experience, 80 to 90% of the people who invest more than 3 years eventually made profit. Most of the times, like maybe shorter time, I don't know, but shorter time is 80 to 90% make loss, but long time, more than 3 years, 80 to 90% people makes profit. This is simply because they don't even bother about the regular movement of the share, and then some of the cases they may not even aware of that. They have this share, they never look into the papers or newspaper, I mean, or the news. Only when the share market moves up, they will say that, okay, I have something in my demat account. Do they have any value? That is the only time when they come to us for some kind of advice. Now sometimes there is also a possibility of a loss in a long time as well. Now if there is a loss, definitely, as and when I tell all my clients, if there is a sale of shares, even in short term or long term, they should immediately inform us, so that we can there will be always there are some other assets where we can sell it off. So if there is a long term capital loss which is in some shares, and there is a huge profit in some other shares, we can always on the 31st March we can sell it off and then buy it in the next month, so that the loss can be basically set off. I mean, so that sometimes people think that the share price will go up in future, but they want to sell some asset capital, I mean, shares which is already in a profit. So we can advise them to sell the shares which is in profit, sell the shares in loss, and then he can buy back the shares in loss in the next day, so that he can only lose that means commission, which is maybe 1 or 1.5%, but he can save on the capital gain. So this is basically a tax planning advice which is given to people, but these are the areas where we can we are basically using the taxation laws to the benefit of the client. So these are the areas where we can actually improve the quality of our service. Now the most important thing nowadays, people are thinking that since after COVID, most of the people think that we can make a huge profit out of share trading. If you look at it, generally, I think now the demat accounts or the share trading account, the brokerage firms, everybody is doing extremely well, because so many people are moving into share transaction. Now, as a novice share trader, most of the people think that they want to make profit every day. That is everybody wants to make money, so that is why people are coming into the stock market. Now, is it possible to make money? Maybe, yes, to a certain extent. But most of the time, what happens is day traders lose money, because they don't have the discipline, they don't have the system, they don't have the study or the hard work which they're supposed to do before they do the trading. Now, for them, what is the best option to make a trading? I tell them that, okay, you go for, if you are going for a trading, definitely you should take it as a business, not as a short-term capital gain or long-term capital gain. So what is the benefit of treating them as a business? Now, business is share trading can be treated as like any business. So most of the people have a second income. so they can set off their income against this business. So that will become, if you make a loss and you have to pay tax on another business, then it will not be look very, very good on, or your overall tax outflow will be higher. Now, who can take this capital gain as a business? So everybody cannot take capital gain as business. So only day traders and derivative traders can take them as a business. Now, derivative traders can take it as a business only provided if they do a proper accounting methods. Short-term traders can take it from the system. You can see the buying and selling value, volume, everything from the software. Whereas in derivative traders, there are three things which comes to the investor. One is they get a bank account or account which is related to their transaction. Then there is a MTM margin. So people will get a debit and credit in their statements, and then there is a settlement. So that settlement amount will be totally paid to the account. Now people don't understand. I had a personal experience which is with the income tax office, whereas one person has invested some 14 lakhs and his final balance is around 5 lakhs. So basically everybody knows that 9 lakh is gone. But while assessing his assessment, the assessing officer told that there is huge transactions which is there are a lot of credits. So it's around I think around 8 to 9 crores is credit is there, and 9 crores, end of the day he made a loss. So this type of credit is there, so you have to show it as some kind of income, maybe 1 or 2%, and then pay tax on it. So his advisor told him that, okay, that is basically a stock exchange broker. He said that, okay, you pay that tax because income tax is very difficult, and you don't mess with them. So this guy came to me. I just looked at it and I asked him, you lost 9 lakhs? Yes, I lost 9 lakhs, and now I don't want to pay tax on that again. So I say that, okay, fine. So this guy don't understand that every day, on the end of the day, whatever be the mark to market margin which comes to his ledger, which is some 80-90 pages, so they cannot understand how the transactions are happen. Now even though MTM is done every day, the transaction he ended is settled maybe in a monthly basis, or maybe 2 weeks or 3 weeks basis. So his transaction is much lower compared to what is showing in his statement. Now the people who are actually not keeping any of the record, when you take up the bank statement, it will be impossible for the person who is doing it, if without proper experience, to analyze the situation. Now when we come across any people like this, we'll tell them that, okay, day wise you have to keep the transaction slips. Basically we'll get the notes from the exchange. That should be kept it in a folder on a daily basis, so that we can go into the folder, and you can keep it in the computer itself. So you can keep it in the folder, and then we can make the transaction. Also we can get nowadays the systems are improved so much. Most of the brokers provide the net transactions. That will be helpful. But even net transaction, there are most of the costs are not included, like STT, like brokerages. Everything is kept and separate, so that the actual cost and the actual brokerage and everything has to be properly identified. Now once you do that, it is always better to have a treat your trading as a business. Now this is this only thing is that this is applicable only to the listed shares, and the other condition is significant trading activity. So what is significant trading activity? So basically people will say that, okay, I made a transaction which run into 1 crore rupees. Now what is 1 crore rupees transaction? Look at it. Now in Nifty, means BSE is trading at 50,000. So 20 per lot. So 20 per lot means if it is 50,000 and 20 per lot, that a single transaction will run to 5 lakh rupees. So if you buy 10 lots, that is 50 lakhs. Now you sell 10 lot, that is another 50 lakhs, so 1 crore rupees. And the profit you make is maybe 1,000 rupees. So what is transaction? Whether it is a crore or 1,000 rupees. So we'll say that most of the people think that I have a huge transaction. I have 10 crores of transaction, 100 crores of transaction. So the actual transaction is only 1,000 rupees. So we have to be, significant trading activity means that there is transaction which is on a regular basis, or at least on a reasonable basis, so that they can make a profit or make a profit or loss, but that makes a changes in their bank account statements or in their account. So income tax officers nowadays ask for that, whether why you are treating this as a business activity. Now we have to have some kind of answer for that. Now the problem with when you are treating it as a business activity, you can't go back and say that when there is much profit, you can't go back and say that I will take 15% and I will not pay as a business activity. Now that has to be taken into consideration, whether this person is going to do it in a regular basis, or this person is going to make profit. All these things are important while giving an advice to the taxpayer. Now when we are treating it as a business, then the shares we have has to be treated as stock in trade. So stock in trade, earlier we can keep it as a long-term asset, which should be treated as a stock in trade. So once you start keeping it as stock in trade, there is no long-term capital gain, only business gain only. So we have to also think that what kind of activity that particular person is doing, whether he is actually doing a long-term, long-term investor or short-term investor. For the time being, like this COVID-19, he is stick to his house and then started trading. But next year onwards, he is not going to do that. Then it would be better to keep it as a capital gain only, not as a business. Now, what are the benefits of treating capital gain as business is, expenses can be deducted, tax shall be applicable on slab rates, all expenses including interest on land can be deducted. So basically these are the benefits to treat capital gain as a business. Now next important thing is that how this everybody says that speculative or non-speculative, they don't know what is speculation and what is non-speculation. So how the incomes to be treated, how that what is actually called speculation. So these are really important factors while making making a business, especially in trading. Now, what is speculation is, if you are not taking position, we are just setting off the transaction, just paying the differences, then it is called speculation. Now, if you ask that, then in futures, in options, in any kind of this kind of transaction, there is no speculation. I mean, this is basically speculation, like, because you are never taking a delivery of a future, you are not taking a delivery of the options. It's all set off. So that is a speculation. But Income Tax Act says that if it is futures and option, then it is not speculation, it is a normal business. So only speculation which they identify is intraday trading. So that means the shares which you are traded, which is not taken into which is never comes into your demat account. Now, what all the transactions which you are do on a daily basis, and you are not taking into the demat account, because every day you can enter into a transaction and you can close the transaction before 3:15. So that would be a day trading, which can be a speculative transaction. Now, what is the difference between taxation aspect of speculation? Now, it is as good as business, so normal tax rates will be applicable. The only difference is losses can be adjusted only against speculative gain. Now, I would rather recommend not to trade in day trading in equity shares, because I would recommend go for a future or option, but obviously that will be a higher risk. But if you do that, basically day trading or speculation is always a risk. So the people who are not afford to take a risk should not be doing a speculative transaction. So which I'll be advice to our clients, we should not be given those things to us. So we should advise, I will always advise my clients that never do this short-term trade, because once you start doing short-term trade, you will be definitely going to lose money. And since it is small money you are losing, it will eventually coming into an aggregate money, which will be affect all your your job, your business and everything. So speculation is the worst thing which can do. So normally, even though we get some fees for doing these things, we'll advise our clients not to do this. Now the speculation business loss only can be carried forward for 4 years, and which can be set off against the speculative gains, which is normal as normal taxation practices. Now, in what is non-speculative? So basically, as per Income Tax Act, intraday futures and option trading is non-speculative income. So futures, as such, generally it is settled by paying the difference. Option is basically settled either at the end of the option period or by buying back or selling back the option. So both these things are, in a way, it is speculative, but the Income Tax Act says that it is not speculative. You can treat it as a normal trading income. So since it is a normal trading income, you can adjust against any other head of your income, excluding salary. So basically, that is a very good concept, because if you have various income, other income, or your business income, or income from property, income from whatever be the things, you can set off capital gains. Everything can be set off. So even though you get some kind of money and then you want to trade it, so then always go for futures, and then keep the account. Then you can treat it as a non-speculative income, and trade them. If there is a loss, you can always set up against the income. That I don't recommend people to just do it and make losses, but even if they want to do that, let them do it that way. Now the other thing is that losses can be carried forward for the next 8 years, and can be set off only against the non-speculative gains. All these things are very important, that the clients or the taxpayer file their returns before the due date. So since we know all our clients basically what all they are trading and this thing. So hello. As trading. So basically, I would recommend that they can always go for they have to file it before the original due date. Now, this is another important thing, whether you have to pay any advance tax on capital gain. Now, most of the people say that there is advance tax. Trading loss should be submit tax. I'll answer the queries once the presentation is over. It comes in the next page anyway. So advance tax on capital gain. So most of the people never pay advance tax on capital gain. So they will say that why to pay tax on capital gain, because they will pay it when the time of filing is come. Now the question is, when the time of filing, normally people never file their returns in March. So normally they file it in maybe in June, July, or maybe the last date, whatever it is. So what happens is since they have not paid the advance tax, they have to pay the interest on the capital gain. So always is better if there is a since we keep our clients on a regular basis and monitor them and maybe advising them. So it is always better if there is a profit, realized profit, then pay an advance tax on that. Now, what is the benefit of that? Now, if you are making a profit and then you make a delay in filing your return, at least your interest part is protected, because you make the profit and you pay the tax. And sometimes what happens is, if you are not paid the advance tax, people will say that, okay, all the money is profit, then they may spend it and they may not have enough money to pay the tax also at the time of filing the return. This is also normally happens. That is why most of the time the income tax returns are delayed, because they don't have the money. Whatever the money they got it, they have spent it. So I'm just saying that on the sake of our clients, it's always better them to advise to pay the advance tax. Now, how the advance tax to be paid? So we can't in this particular case, we can't say that what would be the, maybe you will have a profit till February, and March you may have a major loss. So what we have to do, only realize profit, you book the profit, or whatever you profit you book, you pay the tax. And then if there is a gain, or loss at the end of the year, then never do that loss at the end of the year, make it to the next year. Maybe the 31st March or 1st April may not make a much of a difference, and then you have a long time to capture that loss in the longer term. So this is the way how you manage the portfolios, or reduce the taxation as such. Now, the other important thing is basically audit. Now, as people say that, I have a transaction, people comes and say, oh, you see, sir, I have a transaction of, say, crores and crores of rupees, but how much you made money? I made a small loss. Like, so that is the normal way people comes to say. Now you'll say that, okay, you have to audit. How much your audit fee? Audit fee is very high, because you have to evaluate everything, and then you have to look at all the transaction. Now the question is, what is the turnover? What is the actual turnover to pay the tax? Now, or the audit. So it is very clear that the turnover on, if you are taking the turnover on the FNO, for example, one if you look at Reliance, maybe it is one lot, now it is trading at maybe around 3,000 rupees or 2,900 rupees. So if there is a 200 per share, so it is 6 lakhs. If you buy 10 lots is nothing in F&O, so it may be 60 lakhs. Now, if you buy 3-4 lots and then you sold it, you got a profit of, say, 1,000 rupees or 10,000 rupees. Now, what is your turnover? Your turnover is 10,000 rupees, even though your actual turnover may be 4 or 5 crores. So, what are be the profit? What are be the profits you have to, or what are be the loss? This has to be, taken into consideration. Now, the question is, how much is the, how you are going to arrive that transaction. Now, in FNO, what will future and options, what you'll do is the total gain, total loss, without taking in the negative or positive, add together, that would be your turnover. That means if you made a loss of 10,000 rupees, if you made a profit of 20,000 rupees, your turnover is 30,000. Your turnover is not 10,000, because you have to ignore the plus or minus signs, and you have to accumulate it. How this income tax is arrived, this kind of computation, I never know, but this is what the computation has to be done. Now, then how the audit? If the turnover exceeds 1 crore by taking into consideration all these things, and it is resulted in a profit less than 6%, then the audit is compulsory. Now, normally, if you look at it, very few of them have this turnover if they trade in F&O. But if they trade in equity, then definitely this will have an impact, because if they take a delivery of the equity, and they can, they can, and earlier they can take a leverage against their share, So most of the people will exceed this kind of turnover. They buy the 1,000 shares or 2,000 shares and then hold it for a day and then sell it off. Then what happens is the highest of sale value or the purchase value will be treated as a turnover value. Now, if the turnover exceeds 2 crores, audit is mandatory irrespective of profit or loss. Now, the only difference between these two, if there is a turnover of 1 crore and then there is no transaction, I mean, there is no profit is maybe say around 7%, you don't need to audit. So basically, if a 1 crore transaction, you show a profit of 7 lakhs, your client no need to do the audit. But if the transaction exceeds 2 crores, so and the profit, even if it is profit or loss, you have to audit. Now, what advice we can give to the client? He has to keep a proper records of it, and if he is making a loss consistently, then he don't need to turn over more than a lakh, means a crore rupees. He had to, stop it before 99 lakhs or 99 lakhs 90,000, so that no need to do an audit. But if this advice is given, then our income will be lower. That's it. So next thing is that how the turnover is computed. The intraday trading turnover calculation, the business turnover is a profit or loss in the trade. That is, when you are doing intraday trading, if it is intraday trading in shares, it will be go into a speculation business. So you have to treat it as a speculation business, which is different from the this business. So you have to keep it two separate. Now on futures, as I mentioned, the sum of the absolute value. So you have to ignore the plus or minuses it, and then you have to take it as a turnover. In options, the premium received should be treated as a turnover. And for short-term trading, either sale value or purchase value, whichever is as taken as a turnover. So basically, these are the items regarding the audit. Now, now we can have now there is a commodity and currencies. So basically, in commodities and currencies, all apart from equity, commodity and currencies are always settled without paying any of the means any taking delivery. So only when they have the delivery is taken, or the set off is taken, if there is a actual underlying transaction. So normally the business people who are exporting or importing, they may have a transaction to settle their transaction. Otherwise, they may not have any of the that will be go into their business, nothing to do with the actual what is it trading business. Now, while coming into trading, it always have a business of non-speculative business, which can be treated as the same as a equity. So future option or current, we never everything is settled by setting off against the in currency market, commodity market, everything is settled by the not taking actual delivery. So basically, and since they are not taking actual delivery, the taxation is always in the basis of as a business, or you can always treat it as a speculation business if it is you are taking a possession. But normally none of our people are taking a possession, and this is only happens when there is you have a warehouse and taking a possession in that. That is very rarely happens in our place. So that is why not a deep.
Derek, you have gone on mute mode. Hello, Derek. You are on mute.
Yeah. Okay, now it's okay.
Yeah, now it's okay.
Yes.
There are two questions came to here. One is one Mr. Nagarajan. In case of intraday trading loss, should we submit tax audit report? Now, that means we have already explained that. Now, if there is a loss, a tax audit report is not necessary if your turnover is less than 1 crore rupees and your profit, I mean, less than 1 crore rupees. Now, if it is more than 1 crore, means crore rupees, your day trading volume, and then you have to submit a tax audit report because you have made a loss which is less than 6%. So you have to you have to submit a tax audit report. If and while turnover is calculated, sum of absolute values difference in purchase value. Then there is one other question from Anthony Matthias. How we can prepare P&L of FO where turnover is calculated as sum of absolute values. Now, that question is need a detailed answering because now we have two templates. One is basically to show the profit. When we are doing it, normally people will take only the purchase value, sales value, and the brokerage, whatever. Now we have to take everything, every cost into built into that. Now STT, SEBI transaction charges, and any other means IGST will be there. Means normally most of the brokerage firms are outside, so there will be IGST. Online firms are mostly providing service from outside, and if you are doing it from Kerala, like Geojit or those kind of companies, there will be IGST, CGST, and IGST. Now, how you are going to prepare it? You have to prepare it in a detailed Excel sheet with absolute figures, and then from this absolute figure you have to take the whole amount into the turnover. That is for only finding out your turnover. Now once you find out the turnover, the actual transaction value, underlying transaction value, should be the actual purchase cost plus the expenses you incurred less the expenses over here, and the net will be the profit or loss. So the only for transaction volume we prepare this statement, and all other things are normal as when you are doing as a business, when you are purchasing all those things like purchase expenses maybe, and job, everything has to be deducted, I mean, from that. So that is the answer for that. Any other questions, or we can have?
Sir, if your presentation is over, then we can just start the Q&A. Before moving on, shall I just turn off that share screen so that
Yeah.
we can see you more interaction can take place if we have your screen itself. Oh yes, thank you.
Okay. Okay. Now that query is answered. Any other queries?
Okay. Yeah, dear members, I will just convey the same to the dear members. Dear members, we have that presentation and the faculty is ready for questions. You can just shoot off your queries and so. Someone has just raised his hand. Okay, if some others want to have the personal interaction, you can just raise your hand so that I can just unmute yourselves. In the meantime, I can just shoot off a query if the faculty do permits me.
Yeah, go ahead.
Yeah, sir, what happens is right now the interest in transactions is very huge. That I had observed lots of these NRIs doing this trading, in which they do take delivery of the shares, and most of the times I do observe that they hold it for 4 days, 1 week, or 2 weeks, and they dispose it off. Now, the volume of this such type of transactions is very huge. In fact, I do get confused whether to classify such transactions into speculative or business. Not speculative, whether to classify such transaction to short-term capital gains or business. Now, can I just get to know what should I do if the volume of such types of transactions are quite huge?
See, it should be treated as business. You can't treat it as a short-term capital, I mean capital gain, simply because if you, as I mentioned, the substantial volume. if they have, if you are, there is a substantial volume, and then you treat it as a capital gain, they don't have the right to speculate on the shares. Now there is a very important question for NRIs while doing this transaction. There are limits, where they can trade on shares. Now, most of the NRIs they have normally keep accounts over India. They do it from their SB accounts, or not from their NRE account. And the brokers are always tell them that, okay, you do it, there is no issues. Eventually they will land in big trouble, because it is against the law, it is against the all other regulations, which eventually will land them in big trouble. So if they have doing a transaction, let them do the transactions in foreign, the NRE account, through their foreign account, so that if there is a short time capital gain, then they will deduct it from their then itself. So and how you are treating the transaction is it's all different, but they don't have the right to do it as such.
Okay.
So
Okay.
we have to advise them very clearly that if there is a NRI and you do it from your ordinary account, that will land them in trouble.
Okay. Got it. That's a wonderful piece of advice. Thank you. Thank you, in fact.
Yeah, Derek, I have a doubt. Derek, can you hear me?
Yeah.
Yeah. Now you said that if somebody purchases a share today and sells it after 1 week, definitely it's a business transaction. You said it. Now, can I do it? Can I separate it from long-term capital gain? If I hold accidentally along with my short-term holding, if I hold shares on long-term basis, can I treat simultaneously those transactions as long-term capital gain and at the same time the other one as business transactions? Or should I
No,
that also as business transaction?
no, in that case, see, that is what the difference between the business transaction and long-term transaction. Now, if you are treating as a short-term transaction and long-term transaction, I mean capital gain, then you can do that. See, basically, you buy say 1,000 shares of company called X. Now, out of which 500 shares you kept for 12 months plus, and the 500 shares you kept less than 12 months, and then you sell it. Then you can treat it as a short-term capital gain. Now, if you are trading it as a long term, means business, then in business you can't segregate as such, because only case you can segregate only when when you have capital gains. Otherwise you can't segregate it. That is, I mean, sometimes this kind of questions comes across, because what happens is people are just buying it and selling it, and say that some of them are holding it for a long time and some of them are, then they can do that provided if it is capital gain. If there's business, then they can't do it, because that is itself is we are taking only the best part to ourselves. That is basically evading tax rather than planning of tax.
Couple of questions are there in Q&A, I think.
Okay.
Yeah, I think some more questions has popped up in the menu. Derek sir, if you can
See,
kindly
basically, the tax audit report is quantity detail. See, quantity details is not that difficult, because when you do a transaction in options or futures, the company or the brokerage firm will give you a consolidated statement. That maybe the client may not be aware of that, but we will be able to get that. So we can just ask them and they will provide that. That is not an issue at all, because and mostly they can convert into Excel and then can give it, or if you have the password, we can download it and do that. Because normally what we do is even the brokerage firms may not be aware that they can provide that. So sometimes we also help them to get those statements out of the system. Can we apply 44 44 AD not applicable, because that is that is not a normal business transaction as such, because 6%, if it is more than 6% till 1 crore, then you don't need to audit. So basically more than 6% if you are showing, then there is no need of audit. So but you can't apply 44 AD as such.
One more query that I do have from my own end is, I had observed lots of these insurance policies, basically, which is one-time insurance policies, which is not covered under 1010D. So what happens is the SSC just invests some take in states instance 5 lakhs or something around 10 years back as a one-time policy. Now the policy period is for 10 years, and he just invests just that 5 lakhs. Now what happens is after these 10 years, most probably he will be getting an sum of insurance proceeds of around 15 lakhs or something. Now what happens is this 10 years that the TDS has been deducted. Now in such types of cases, what is the best advised policy? Whether we should go for capital gains or short-term capital gains, or whether it should be offered in income from other sources?
You see, when this particular policies, because most of them are ULIP policies, so ULIP policies are what we normally do if there is a regular income policy, which you have mentioned. These are regular income policies. So it's always better that regular income has to be included that year itself, rather than go for a fine. If they are getting a bullet payment, then always they can make a deduction and indexation, which may be the more profitable way. But if it is they are saying that, okay, yearly, there are two types of things. One is bullet payment and one is yearly payment. Yearly payment is always better to show it in the year itself. And if there is no bullet payment, then you can deduct proportionate cost as well from the policy, so that what all the expenses and what all the profit they can share it. Now the other thing is that most of these companies were doing ULIP, they have already paid tax on it. That means they basically direct tax on TDS on it. So basically, if there is a mismatch between the TDS and the payment, then you are waiting for the 10 years for the bullet payment. There will be dispute. So it's always better to close it as quick. I mean, as and when the amount is credited to our account. Even if it is not bullet payment, they have declared the dividend. Then maybe we can also treat that on a yearly basis if it is declared. But normally in these cases they may not declare it. We have the option.
Okay.
This ULIP nowadays, even there are a couple of ULIP they have. If there is a ULIP, there is a huge profit, and there is another ULIP which they may not have profit. It is always better to close them together, as I mentioned, as a tax planning basis.
Okay.
See, we should know completely about the client, to give them a very good advice.
Yeah, is there any difference in taxation when it comes to commodity transactions or currency market transaction than the share market transaction?
Not see, basically when commodity transaction, there is not a much of a difference, because there are basically F&O transactions only in commodity. Now there are also they can keep and purchase and keep it in their warehouse. Then it would be like a business straight away. So that is the only difference. This kind of, because in Kerala not much people are doing this kind of business. And the other thing what they do is, in options, they hedge the positions. Basically, for example, you have 10,000 kilos of pepper, which you have already going to purchase, or you have a farm. And now the current price is say 375. You know that when the cultivation happens, it may be little lower, and you are okay with this 375. Now you hedge that, and then that income, agricultural income, is tax free basically, especially when it comes to pepper. I mean, if it is coffee or rubber, it's a different thing, but when it comes to pepper, it is tax free. Now for him, he can treat it as a business, because agriculture, he can segregate that agricultural income. So whatever be the loss or gain in that particular commodity can be treated as a business, and then he can pay tax or get benefit out of it. whatever loss he makes over here, or whatever this thing makes over here, will be set off against the income in the agriculture sector. So and then for traders, I mean, then there are the other party who is interested to do it. Maybe traders, they have a 1-year contract to supply for some of these big companies. So for them also, they hedge it as a part of their business. So that would be, I mean, it's nothing to do with trading. It is directly go to their business income. So I mean, income or loss depending upon the situation. So now for us, it is just like if we are looking at the equity part of kind of thing, it is always for us a gain or loss. That's it. I mean, it's nothing to do with other. We can treat it as an equity itself.
So for
because
others,
we never take delivery of it.
yeah, for others, if somebody else enters into a commodity market, will it be speculative?
No, F&O is, see, it is a F&O transaction, so there is no nothing is called speculative as such. It is a business.
Even if I'm not trading in that particular commodity.
I couldn't get you.
Even if I'm not a agriculturist, or even if I'm not a businessman who is normally trading in that agriculture product, if I am a pure speculator and I am speculate in that commodity, even then in that case, will it be a commodity?
Then still it is treated as a business, because you are not taking the possession of it, or you are only trading in the contracts, F&O contracts. You like there is no spot buying basically. You are always trading in the if you are buying a spot, then it may make a difference, but you never buy it spot on commodity.
Yes, Derek, you have a couple of questions also. You can just look at that Q&A session.
Deemed dividend. Deemed dividend basically, as per that section, the dividends are basically now they are giving bonuses. That's are all deemed dividends, except it's very explained in the section 222. So apart from that, nothing is called deemed dividend. Then the income tax officers may find some deemed, which we may not be able to comment it. Maybe salaries are all. Sometimes they come up and say that is a deemed dividend, but as such, income tax act specifically mentioned these kind of items only. Income has engaged in share trading on a substantial business. So when he consolidated profit and loss account is prepared, would it possible to offset depreciation on medical plant and machinery with the income of share trading? It's this one. This was a very interesting question. Whether it can
I
be.
think, sir, for the other members' benefit also, we shall just read it loud itself.
Okay. Sir, a doctor having a professional income and has engaged in share trading on a substantial basis. So when a consolidated profit and loss account is prepared, would it be possible to offset depreciation on medical plant and machinery with the income of share trading? It is Mr. C.A. Niglesh Dubey. His membership number is 72522. So this question need actually a little bit of more this thing. So I can't directly answer to this. We'll give an answer separately to him. You can get his details and then share it with him.
Definitely.
It's a very complicated question. It cannot be answered or just like that.
Technically, you can. There is still time. You can just post your questions, which can be, if possible, it can be taken by the SSE. Surely, I should add that disclaimer also right now.
Technically, it is possible, but we have to see that all other aspects. And see, basically, when we are giving this kind of advices, we should understand the basic. What kind of tax and trading and things he has done also. Because most of the cases, this is basically depreciation expenses which is not covered of. So that side is you have to be a little bit careful, because normally a practicing doctor may not have huge machinery unless until he runs a hospital kind of thing. So a little bit more details to be required for giving an answer to this kind of specific questions.
One more query that I do have from my part is that recently most of these clients, has, especially these HNIs, are investing into these portfolio management services. Some 25 lakhs, 50 lakhs, it starts from there only. Now these PMS houses, fund houses, what they do is that they throws out an annual report in which it does carry an audit report and also a profit and loss account and a balance sheet. Okay. Now this balance sheet, sometimes it does carry information of the short-term capital gain and long-term capital gain, along with the other charges of the fund houses and including the tax audit fees. Now, is it possible for me to deduct all such types of expenses against this short-term capital gains and long-term capital gains proportionately?
Yeah, you can do that.
Okay, okay.
Because that is very apparent, because these expenses are basically deducted from the total capital value of their assets. There nothing is free. Even the audit fees, they are charging separately on that. If you look at it.
Okay. So it shall be done on the proportionate basis of the capital gains or whether on the transaction.
No, see, basically, if it is, long-term capital gain, if you are deducting it, then, you can go for a 20 percentage thing. So, means without taking any, 10% thing without taking any deduction. So basically, you adjust it against a short time. So that there you will get the benefit of this 15% thing, which will be reduced accordingly.
Okay.
Nothing wrong in doing that as long as you are not violating the laws. Planning is okay. So,
when you mentioned that currencies, trading in currencies, can you just elaborate more on trading in cryptocurrencies right now, as Bitcoin, Ethereum, everything has gone up. Now, most of the young generation are trading in cryptocurrencies also, using these apps and things. Now, what sort of and it should be brought in, whether it's speculative or non-speculative. You just mentioned that if there is delivery, there is no delivery in the currencies. But what happens is some of the cryptocurrencies that we usually trade in, there is an option of taking delivery in our e-wallet. I do take delivery in my e-wallet itself. So I am in fact taking the delivery of the currency also. Now, if I engage in such type of trading, what type of trading it should be classified as?
Well, in cryptocurrency, I really don't know whether it is legal at the moment in India, first of all. Secondly, it's basically, crypto, especially in this Bitcoin, that is the one which is very common. And when I was in Dubai, it was trading at around, I think, $2,800. Now it is $30,000. It's gone up quite substantially. But being said that, there is nobody is controlling it actually. So when you have it's actually a delivery based trade. You don't trade it. You actually buy it and keep it in your wallet, and then you sell it. In that, it will be like, if you put it that parlance, and it is not listed, basically, it is unlisted. So you put it in parlance, then you can say that up to 24 months, it should be short-term capital gain. And, you put it in the equity side kind of thing. And more than 24 months, it will be like, long-term capital gain. Being said that, I will tell you, this is not legal at the moment. And maybe, you have a foreign asset, which is an undisclosed foreign asset, which is, that is what I'm saying, that people are not aware of these kind of currencies. I do trade, I mean, on different various investments, but I never ever touch on these things which is not knowing. And other thing is when we are looking at Bitcoin, I mean cryptocurrencies of Bitcoin, which is 1 second, I think. Bitcoin or cryptocurrencies, there is a big major problem because there is no control. It can move any direction. It actually dropped to around $9,000 in March. Since I was, very active in the investment, I do track all those things, and my clients have, have this kind of investments. So I tell them that I don't understand, so I don't recommend you anything. But it's up to and some of these technical geeks, like who is actually in the IT sector, I mean information technology sector, they're really doing it, especially based in Europe and US. They really do it, and they made money also. I mean, to be fair, but they have to pay tax over there for that.
I must mention that from the October, the lows of 10 lakhs, it just shot up into 28 lakhs per Bitcoin in January. So that the income is quite lucrative, and we will all be into the same soon. So the taxation possibilities are very high also there.
Yeah, see, the tax basically taxation will come. I mean, on those things. See, as long as government knows that there is a taxation possibility, they definitely come across. I mean, come with that new ideas. The only issue which I feel with this Bitcoin and all, I mean, it can move the value because the underlying, we don't know what is the underlying of it. So the price movement will be substantial, and the government will not also don't know what is underlying of it. So they may not fix it properly, how the taxation aspect on that. So maybe it will be, I mean, as I told you, since it is, if you treat it as a unlisted, because it is not listed, so it's an unlisted kind of thing. In India, it is not listed. It can be 24 months, and after that, long time gap again, kind of.
Okay.
Logically, I'm saying it's not anything concrete on that, but logically we are connecting it. It will be something like that. So I think people don't have much of questions. Either I clarified it very well, or I have not.
It's the other way around. We have touched lots of subjects. In fact, even though the scope is narrow, the volume, the number of cases that do comes up is right now very high itself. Of this taxation of dividends and things, everything.
In future, I will tell you, in near future, thousands of cases will come because people don't understand. Most of them don't even file their returns, and not only the profit, even for those people who made loss will get notices, because how they got the money to trade and lost such kind of substantial amount. And means since I was in the market for quite some time, I do have some kind of intelligence which shows that in THRISSUR itself maybe thousands of people will get notices, because it's very simple. The security transaction tax, STT, you just multiply it with that 1 lakh, I mean it's 0.01%. You multiply it with 10,000, you get the transaction. So if you pay a lakh rupees in a security transaction tax, you just imagine the volume and the loss, and then there is an easy method. When you pay STT on purchase and STT on sales, and you see the difference and multiply it the percentage, you get what is the profit or loss. You don't need to do any rocket science to do that. He said that you don't give ideas to the income tax department. But we normally, people will come and say that I have, some of them will have various statements and things like that. So I just do this kind of thing. So it would be very easy for me to come up with a basic idea. You can't see all the transactions as such. So you do these kind of things to cross-verify that.
Ajit, if there is no other question, we can conclude.
Yes, I think there are no more questions before moving on to the closing remarks. Derrick sir, I know that you have been investing from 16. So just a out of question from the topic, I do invite your attention now to the investor or investor, suitable investors in the chartered accountant community. What do you see the future prospects of the Indian market, especially the Indian stock market?
See, that is, from our background, we'll say that, you never means, predict the market. But being said that, I would see the current market run up is not with full legs, if you ask me. Being said that, I do believe that the market will move or the specific stock sector will move higher, and the sectors which is already moved up will come up a little bit lower, especially the banking sector and the service sector, which is supposed to, and maybe the pharmaceutical sector, because it is run because of the what is it, propaganda, or what you can say that people becomes ascetic, like because of thinking that okay, a vaccine will come and everything will be over. It's not like that. Now, if you look at the scenario, basic scenario, the economy is in not in a very good direction. Everybody knows about it. Now, when you're saying that, there is a huge possibility that or big possibility that government is going to spend a lot of money on infrastructure and the small. I mean, now most of the rules are coming to consolidate the large business houses. So once that is done, then there will be the concentration will be going into the infrastructure, and then the shorter, or smaller sector people, because it's easy for a government to make laws for bigger people, or the largest companies, and then come back to the smaller ones. Otherwise, what will happen is basically, that is the only way to prop up the economy faster. Now, when we are saying infrastructure, all the infrastructure things are actually moved up quite a bit. So, like cement, steel, those kind of things. Now, who will be going to benefit more is smaller players. Maybe smaller players are not moved up, like maybe the construction guys, or maybe the niche market players who is actually have some special skills, like they are expert in bridge construction, they are expert in maybe faster kind of construction, they may be expert in bitumen production, or the latest technologies, they are using the latest technologies. Agricultural companies, these companies are going to make a big difference. So now, if you look at it, India is an agrarian society, even though income is coming much lower from the agrarian society. So you have to look at it, food processing companies. You have to look at it, the transportation companies. You have to look at it, the specialized vehicles or specialized construction companies, and also maybe the defense sector, which is going to be very good. Now, whether it's the right time to buy it, there is nothing called right time to buy it in a stock market. But what we can say that the right time to buy a share is when people are all pessimistic. So March will be the very good time to do that. We do some investments in L&T, ONGC, those kind of companies, which is may not be the limelight at that point of time. And we do some kind Dishman Carbogen, those kind of pharmaceutical companies where things are not looking up. But if you are concentrate on those companies which is having a captive research base and a speciality, you will definitely do well. Look at in the time of 3 to 5 years minimum. Don't look at it in every day the prices. If you look at it, you will be get disappointed and sell off. The shares which I mentioned to you on this thing is Capri Global, which is earlier it's called Money Matter Financial, which I bought for myself and one of my clients is bought for 35 rupees, which I sold for around 220 rupees. So basically, I hold it for 7 years. But 7 years, you made such a profit that you don't need to do it on a regular basis, and you have to file only once, after 7 years. So that you have to look at, and once I have identifying a share, you have to see that minimum that company should be in the business for 5 years minimum. It may be listed recently, but it should be in business for 5 years. At least their cash flows will be positive. There should be income or profit. You should not buy into a company where because of people are saying it. Like I don't want to mention it. It's like Byju's and all, Flipkart, or those kind of companies. And maybe it may go into a different level, but being said that, if I was a long-term investor with at my age, I will never invest in those kind of companies. Maybe when I was 20 years old, maybe I will invest in that, because that time if I lose money, I can make it again. But this time may not be doing that. So that was the advice to the stock market. So when I do at 17, I do a lot of mistakes. So now I become a little bit more matured and will not do that again.
Thanks for the personal advice. And we are waiting for March to come, because you for the corrections to come.
Yeah, and I mean, I don't think, see, basically you have to identify the shade, in the sense that look at those, just 3 simple rules I apply: minimum 5 years in existence, positive cash flows, and there is a means minimum 7 or 8 quarters of 9, means I say 8 quarters behind 9 quarters of positive means growth. Now positive growth doesn't mean that you have to have positive profitability, but because of the corona you have to adjust it for that, but still, and good management. This good management is always, that is the first thing, and these 3 things are there. If you buy the shares and hold it for 7 years, maybe 20-30% of the shares will lose, but out of even 70%, you make one share 5 times or 6 times, you make much of your money. And whatever you make it in a bank account, or whatever you make it in your profession, that this will all surpass, no doubt about it. There is one question, sir. There is a possibility that we keep strict records for long-term shares and separate workings for day trading and claim both? Yeah, it can be done. Because if it is, you are separately keeping a record for long-term shares and day trading, you can claim long-term capital gain, provided you don't buy it together, and selling it part of it. So you have to keep separate purchases. That's it. So if you want to buy 1,000 shares, and 500 shares for long term, 500 shares you buy it separate, and 500 shares you buy it short term, and keep it the record separate. That can be done. But the single transaction, you can't segregate it and keep it.
So I think that's the end of the Q&A session. Chairman, I do invite you for the closing remarks.
Yes, good evening, members. We just had a wonderful session from CA Derrick. In fact, for the last 6 months, I was thinking about this topic, and I was searching for a faculty. In fact, I tried someone from Chennai. Then he said he was not prepared. Then I tried a senior member from our own branch. He said he would definitely do it. But after that, he also declined because of his busy schedule. But after that, I reached the right person. In fact, I should say like that, because the level in which the knowledge that he shared today, especially the taxation of dividends, short-term versus long-term, taxation of long-term capital gain, then speculative versus non-speculative, capital gain versus business income, and of course, the tax audit limits. A lot of confusions were there among the professionals with respect to the limits of tax audit. So, Sir Derrick, you handled the topic really, really well. Full appreciation for your efforts, and you prepared very nicely. Your presentations were very good. I think you will share your presentations with us so that it will benefit the members. So, thank you, Derrick, for your time and for your effort.
Welcome.
Yeah, and now over to you, Siyajit, for the vote of thanks, formal vote of thanks.
Yeah, thank you, sir. So I'm good to go. Derek sir, everyone agrees that investing is an art. But because of the innumerable trading transactions that our clients does engage these days, things has gone in such a way that filing his ITRs is also an art. Such voluminous is the reports that are being thrown by the small and medium investors for filing and compliances. Of late, the trading in the stock market has captured the wide attention of deep-pocketed non-resident Indians also. Thus, today's museum subject does carry a huge importance to us chartered accountants. Now, our speaker today covered lots of areas, especially dividends, capital gains, currencies, etc. Very crucial information has been presented also about tax planning. I do acknowledge that sometimes the profit and loss account statement that the new age fund houses throws out does not contain information about the expenses like STT, brokerage, other charges, etc. After processing the same in our offices only, we get the actual profit and loss account. In a way, we are generating an MIS report along with enabling tax returns. Now, today's VCM by our learned faculty CA, DERICK RAPHAEL, covered all the inner nuances in a very detailed manner. I must mention my personal thanks for the advice that for speculative transactions may be carried in futures and options if one is willing to take the risk. I must add that while planning for the advanced tax in the dividends, for current year dividend income must be factored in. HNI is having huge dividend income, will have to shell out huge tax, advanced tax in fact. On behalf of the branch, I would like to thank CA DERICK RAPHAEL for the very wonderful and quite interesting presentation. Thank you, Chairman C. Anuj for chairing the session. Also, thank you, Vice Chairman C. RKK for the intro. Thank you, dear attendees, for the support. Thank you all once again. Stay safe.
Thank you very much, everybody.